Alright, now welcome to another video, and this one we're going to be talking about copper. In this report here that we're going to be looking through, this presentation is the one that we send to clients, and not only are we going to give you a bit of insight here into this very important commodity, but also have a look at the general structure of the report. You can see there that there's quite an interesting range of topics that, and that's quite representative of what we're usually doing here. So a bit of macro at the front, a few sort of investment ideas or thoughts into asset allocation, portfolio management. So getting straight into it, and you can probably gather here that it is very much chart focused, hence our name, top-down charts. Very much charts, indicators, data driven, and very much multi-factor. So you're going to see fundamental charts here, such as the PMIs for China, and you're also going to see very much pure price-driven charts, such as this one over here. All right, so the general format of it is that again very much chart focused, a series of charts, and then a bit of narrative, a bit of story to tie it all together, and how to think about that from an investing or asset allocation perspective. The target market of this report, by the way, is institutional clients, generally in the pension fund, asset allocator, hedge fund space. But certainly open to new clients in areas other than that, if it makes a lot of sense. So here is the bottom line for this one today. So copper, a key macro variable, is seeing considerable momentum and further potential upside or overshoot risk in the short term, but medium term the headwinds loom. And that sounds like a bit of a interesting, or arguably a weird conclusion, one that's sort of hedging the view, but it makes a bit of sense when you start to look at the charts, and I will explain why. So the first one is looking at copper in relation to a couple of pretty important Chinese data points. The reason why I focus on China a lot for copper is that not only can copper actually give you, copper in and of itself give you some insights into China, and that should be telling, but China itself is basically the largest consumer of copper globally. It accounts for at least 50% of global copper demand, and what's driving that? A number of things. So property, infrastructure investment, and just factory build out, and export inputs. And so when you look at this chart here of the China PMIs versus the copper price, it's not just fun with correlations. It's not just some sort of spurious or coincident that these two happen to be traveling together. China being the pretty much the price setter for copper. Whatever's going on in China is going to be impacting copper. And you can see that there, during this period, pretty much ever since the rebound after the financial crisis, China went through this period of prolonged slowing. I mean, there was some little kind of mini cycles, I guess you could call it, between that, and that's a whole cyclical versus structural view, but it was largely structural headwinds that was causing that persistent downward flow. And it was when these two structural and cyclical headwinds met up in 2016, 2015 that really caused some issues there, and also drove the authorities to do a bunch of stimulus, which turned things around. You can see there, and that turnaround in the PMI actually provided a really good lead on what happened with copper there. So that's one to be keeping an eye on now. And if you think about all the tailwinds that helped it rebound there, a lot of those tailwinds are starting to turn now, and a couple of them, such as property, are going to become headwinds next year. We've talked about that a lot elsewhere. If you want to hear more about that, certainly let me know, and we can talk. But the other one here is kind of standing in contrast, kind of recently at least, is the China Containerized Freight Index. That's a measure of freight rates for China, and reflecting sort of broad exports really. Kind of similar to the Baltic Dry Index, but broader coverage. Baltic Dry is just bulk commodities, but this one's covers a range of exports. You can see there's a bit of divergence, which is another thing that you know, is going to produce some question marks about the sustainability or strength of this rally. But you know, talking before we talked about that short-term upside risk, this is probably a good explanation for that one. You can see here on the left, this is a chart of copper, just a weekly chart, nominal prices, and it looks to be in a longer term upward trend there. And you know, from a short-term upside risk perspective, and you know, given that the medium-term case is bearish, and I'd say the overall case is kind of bearish, it's worth considering the risk scenario to that, which is an upside risk scenario. And the upside risk scenario here is that you know, it does something like it did in the early 2000s there, when it, you know, came up off that trend line and accelerated to pretty extreme levels. And certainly if you look at this chart here on the right, real copper price, so it's deflated by US producer prices versus its long-term average, you can see whenever it moved beyond that yellow line, the 1 standard deviation beyond long-term average, there was this tendency to have a rapid acceleration. So, you know, quite a number of occasions broke through that level and just went ballistic. So that's the upside risk scenario in the short term. Thinking over more of a medium-term view, and you know, generally I prefer to think more medium to long term because there's a couple of reasons. First of all, you tend to be able to have a little bit more conviction in it. So for example, you look at this longer term chart here, you know, if you're taking a long bias when it's down at that green line or down below, certainly at least below the red line, that's typically, you know, when you can have greater confidence that it is going to head higher over the medium long run. And you know, whenever it gets above that yellow line, that tends to be the risk zone, you know, and probably have a bearish bias at that point. And even on this long-term trend chart, you know, it does look to be in an upward trend there, and you know, typically that's thought of as a bullish thing. But it's when it gets stretched away from that trend line, and you know, it's probably not that stretched at the moment, but certainly, you know, if you're thinking about a bullish case, it'd be easy to make the bull case when it's just resting on the trend line like it was in that 2016 period. And you know, back in that 2016 period, that was when we were talking about this chart as well, which helped set up that case. So I was quite bullish on copper actually around that period there, and as soon as it broke out of that triangle, it was go time. So it's good to look back in hindsight and reflect on the victories. So that's helps, I guess, reconcile some of that short-term versus medium-term aspects. Looking at some of these shorter-term price charts, well, first of all, this one's probably a good one. Not as short-term, because you know, you can see a bit of persistency in some of the things that are going on there. So it shows you the copper price and the sort of copper-coloured line there. What's not a coincidence. The blue line is the chart the ratio of the Euromoney Global Copper Miners Index versus an MSCI World. That's simply the copper stock relative performance, and you can see there that it's diverging. It's you know, the trend in that is down versus an upward run in copper. Now we've had these kind of divergences before. For example, in 2009 period, it was ahead of where copper was, and helped sort of identify the upside opportunity there. Again in 2013, diverging down to the downside there, which helped identify that there was that downside risk. So I'd say that at the moment, pretty similar to what's going on in oil as well. So that's a bit of downside risk, or something to tilt the bias to the downside. I mean, of course, with this, there's always two interpretations. The other interpretation is that copper stocks are due for some upside performance, and certainly, if copper can continue its run, then those guys are going to go into catch-up mode at some point. But if you think about the dynamics behind that, what's driving copper stocks, it's typically it's going to be the people that are knowing what's going on with these companies. And copper stock analysts probably going to have a pretty decent insight into what's going on with the trends in the industry for copper. So that they are implicitly skeptical about the rise in copper prices is something to pay attention to, in my view. These two charts, they were from a couple of weeks ago, so I might just show you the updated view. Again, you can see there, that's the updated view of that copper stock relative performance chart. So these two ones here, bond yields versus copper prices. So the first one shows you the copper price against the China 10-year government bond yield. Actually are seeing a bit of follow through there from the China bond yield, and the copper versus gold ratio versus US 10-year, seeing a little bit of follow through there as well. Still some upside there, you could argue, and that reflects that short term at least. The global macro currents have been very, very positive. And it does tie back to what has been going on with China there, because China is a big part of the global economy. Also ties into the fact that global trade has been doing pretty well. Developed economies doing really well. So, we're actually in a time where the global economy is doing very well, and, China accounts for 50% of global copper demand, but there's the rest of the world too, which still matters. So, and there are some signs that the global economic cycle is starting to mature. But these two charts do at least show you that it's not just price momentum; it's macro momentum as well, I guess you could call it. So, just reviewing what we went through. The price-based charts showed you that short term there's overshoot or upside risks, but medium term, at this point you start to develop a bearish bias, and should we see further extension against trend, should we see further overshoot to the upside on the real copper price, that's just going to build conviction there. And certainly with China, we had a few data disappointments even already, but the big theme for next year, and really the big driver for next year, I think, is going to be what's happening with China. And that's something that we've been watching very closely, been talking to our clients very much about this topic, and China is probably going to hold the key for copper, and my bias would be to expect headwinds versus tailwinds that we've seen in the last year from China over the next year. So that pretty much rounds out the case. And look, if you've got any comments or questions, if you've got any charts that you wanted to add to the mix, please do get in touch, put them in the YouTube video comments below, and yeah, go ahead and subscribe to the channel, because we'll be doing more of this.